All right, happy Sunday, everyone. Welcome back to the legendary Gold Rush Weekly Watch List. Got a few names I want to go through this week. Some new names than what we're used to. If you see any new names, don't be shocked. I just see some setups that I cannot ignore. But before that, this week we have just a handful of names for earnings. We have Stitch Fix on Monday after close. We have AutoZone in the morning, Tuesday morning. We have Steelcase after close on Tuesday. General Mills before open on Wednesday. FedEx after close. And then just some other smaller companies. Not much going on there. In terms of the economic calendar this week, it looks like there's a bunch going on this week. So we made it through OPEX quad witching last week, right? So there might be a good reason for the market to make a nice move to the upside, or maybe a continuation. OPEX wouldn't be the catalyst for it though, right? So OPEX is done, and we did get a nice red day on Friday to cap that off. It looks like there's a bunch of short interest increasing in coals, and I'm just looking through the earnings, the economic calendar right now. There's some catalysts for coals, for Nikola. We have Oracle, we have Uber, Pfizer. Who else? Let's see. Pinterest has something going on this week. CrowdStrike has something going on this week. A lot of action in the market this week. Microsoft and Amazon have something going on Wednesday. So yeah, take a look at that economic calendar channel, guys. There's so much going on in there that you don't want to miss. You don't want to make sure you're stuck in a position that you don't want to be with all of the economic events that are occurring this week. So with that being said, let's get right into the charts. I have about 15 or so names, and as you know, I want to get this down to about 30 minutes or so. So let's see if we can get it done. First one is SPX. SPX last week pretty much went flat for the week, right? If we put the weekly chart up, inside bar for the previous week, pulling back to the lows, sitting right above the 20-day moving average still, right? So there's a little bit left to be desired with SPX. Now, looking at it from here, it looks like, let's see, the high is 54, 45, 14, 29, 45. So we did form a double inside week so far on SPX, right? So as you can see, the highs keep getting lower and the lows keep getting higher. So range is getting much, very tight, right? Very tight. You see how it kind of loosened up here and broke down and formed and retested some of these lows, and now we're tightening up in this area in order to make a decision. Putting things into perspective, that's really good, especially after a quad witching Friday. The fact that we didn't break all the way down. So if there's any reason to go up, this thing can bounce off the 20-day moving average, try to test that 50-day, break through the 50-day, and try to work its way back to that VWAP from the swing high. So I'll be looking for action off the 20-day potentially, and also looking for anything off the 50-day for SPX for this week. The next one is QQQ. Pretty much same thing, kind of rejection, hard rejection off of the highs, but same thing. We have a double inside week, right? Larger range, and you can see range is contracting within the next couple of candles. So, who's to say that it's going to be this week? We might even get one more week of tightening range on this, right? So who knows? But I do like when range tightens up like this, because if we break to the upside or downside, we do have previous targets to reach, right? Personally, I like this. I'm favoring the downside break, only so we can come back to this area where there's previous demand, looks like, based on these two candlesticks here. So maybe we can come back and retest that demand and work our way up and make some higher highs. But pretty much same exact setup. Tech, whenever the market fails, tech usually is the weakest. And whenever the market is ripping, tech is usually what's guiding it. So I like to always keep an eye on QQQ, make sure that QQQ is always on my chart, so that we're well aware of what's happening, right? But QQQ back to this 366, 365 area here, and then potential bounce to the upside. Otherwise, we take out the high of Friday and high of Thursday, and then we can target the high of the previous Friday at $380.83. Next one is XLE. XLE, it's been on an absolute tear. It did pop up over its pivot high here on Thursday. and then a bunch of sell pressure came in and brought it back down. And you know, the sell pressure could be a supply zone, or it can be a just selling from OPEX, right? Enough money, like people made money all 3 months from the previous OPEX till now, right? Or this entire move, you know, throughout all this entire move. And so people might just say, you know what, let's just sell on Friday. It's a good day to sell, especially, you know, things don't really move too well in September, so why not take some profit? But I would like to see XLE hold this low of this candlestick here at 91.65 to potentially try to retest that high. Right, break down below this candlestick, this low of this candlestick. We can target that 20-day moving average at around, it'll be around $90 at that point. So good spot for XLE, or what is this? Is this XLE? Yeah, XLE, to see, you know, to give us a nice clear target to the upside or downside. Next one is XLF. XLF, let's go into the weekly with this real quick. You can see that it's been forming this wedge for quite some time now. Not only making lower highs and higher lows, but also finding really strong resistance at this $36 level, right? So if we do break out of this wedge and we get above this area of sell pressure here at 35 and change, then we can work our way into that $36 mark. That'll be the first target once we get that breakout for XLF. But I do like how it's just kind of, you know, price is very cleanly going through this wedge. Ever since we got this drop, we kind of formed the cup and handle. There's your cup, right? Here's your cup here. And there's your kind of handle, higher low, right? You got the higher lows. And you got even a green day on a red Friday, right? So very interesting, very, very solid setup for XLF. Obviously with XLF, you want to target Bank of America, BAC, you want to target JP Morgan, JPM. Goldman Sachs is a great one. You know, it moves with a lot of volatility, so that'll be another one to target if you see the breakout happening for XLF. A new addition, XLU utilities ETF. I just want to keep my eye on, you know, stay well rounded and keep our eye on everything. Not much going on with it right now, but it is above the 50-day, and it did make a new high on Friday before pulling back to the 50-day. So I want to see what happens with this 50-day. I want to see if it can hold along this 50-day. And then from there work its way possibly up to the 100-day, and then from there up to the 200-day. Otherwise, if it fails that 50-day, I think it's going to come back to retest this area of congestion here. Looks like it became a little bit of a supply zone the way it sold off, but we have the 20-day there to catch it. So I think that underneath the 50-day, we can try to test that 20-day, and then above this 100-day, we can test that 200-day. So again, very, very clearly defined setup. You know, not too much to think about. With these tickers, with the X's, you got to put a little bit of time on them, and you got to be patient, right? So maybe a 2-week play, or if you want to swing into Friday, and just have enough patience, right? Like if you can put it in a different portfolio and just give it a few days to chop around, but it'll make the move. It definitely will make the move. I think from here we're gonna get into our names. Let's see. Yep, CCJ is the first one. I mean, it hit our target of $39.98. Sorry, $38.98 or $39 rather on Wednesday, and it ripped right through it and it hit, you know, at the high of 41.65, and then big sell pressure came in. Now again, I'm not sure if this is people taking profit from swinging from way back here or even over here or anywhere over here, right? Or if this is just a result of options expiration. So it will be one to watch for me for sure. Now that the move is done, right? We kind of swung. We had this Fibonacci calculated move from this swing low to this swing high. The pullback held a bunch of support at the 61% fib, came back up, bounced, pulled back to the 786 fib, and then ripped into that 1618 final target. So that Fibonacci move is done. So now I want to see it kind of pull back to this level, find some support here, and establish a new baseline. In order to potentially work its way back into the higher levels, the 45s and the 50s. I would love for it to chop into, let the 20-day and the 50-day catch up to it right around this level. So I wouldn't be surprised if it were to pull back and undo some of this price action here, and maybe even come all the way back down to 37 to try to retest some of this previous resistance here, right? So CCJ is definitely one to watch, especially with that. Look at how strong of a move that is, right? Otherwise, if it doesn't pull back and it continues to rip, then this thing can easily go parabolic. I mean, it's out of control. So very, very good on us to have CCJ on our watch list every week. Next one is Amazon. The reason why I like Amazon, so I calculated a Fibonacci move from the earnings gap up, right? So we gapped up, We pulled back to previous resistance, bounced off that 50-day moving average a couple times, and then ripped to form new highs, and then failed on Thursday and Friday, right? We put in a doji. I forget what this is called, hanging man or something. I don't know, but it made a nice resting bar, especially out of this move, right? If I were to do, I mean, it wouldn't work on a 2-day, but like, look at this entire strong move, new high on this candlestick, and then a resting bar with even a new high. So I think that OPEX was to blame for this sell-off, especially with how much this has been ripping. I would love to see this based on this 786% fib line here. Do I have a final target? Yeah, final target for this is going to be 155 for Amazon. So I think that if we can base along this level and find support where there was previous resistance here, then there's potential for us to go into this $150 mark and then 155. And then looking back, I think we're like 180 was the high or something for Amazon. Let's see. The high was, 188.48 or so, right? This candlestick here. Let's see what it was. 188.65 is the high. So we're working our way into those highs, but we want to see Amazon find some support where there was previous resistance here. So let's see what happens with it. Definitely going to be on the watch list this week. Apple. Apple should stay on everybody's watch list because Apple dictates where tech goes for the most part, right? It was a little bit weird this week because I think some tech names were ripping while Apple was flat, which is all right? That's fine. But I think that everyone should just always keep their Apple on their pulse on the neck of Apple, just so that you understand kind of where everything feels like it wants to go. I'm looking at this level here, and there's just a bunch of action going on across this level. A bunch of resistance here, dojis and rejection, strong breakouts, pullback, and then continuation. Right, so just a lot of magnetism on this line here. After it broke out, it gapped down and pulled back to this level. Buyers brought it right back up and kept it moving. And then when it failed on this day, it bounced right at this level, and then again on this day. So I think that this is a potentially very crucial level for Apple. This $173.57 mark, potentially area where we can bounce. I'm not sure if there's demand there. It doesn't really quite look like demand. It's not as clean as I would like to see it, but I do see that there's a bunch of interest here. So if we can defend this 173.57 level, then I think that Apple will have a nice week, and tech will have a nice week, and the market will have a nice week, right? If we can defend that level. And by nice week, I just mean, things are going to rise, right? Prices are going to rise. For me, it doesn't matter if it goes up or down. We're going to make money regardless. But as a shareholder, I would like the price to rise. But even if it breaks down below that 173.57 mark, we can come back to test this $170 mark. There's a little bit of a gap to fill underneath 167.33, and then we got the 200-day moving average. So there will be a few areas where we can target to the downside here. Right, we got a little bit of a very tiny gap there. And then we got the 200-day to target on our way down. So I do like it for the downside. Otherwise, if it does bounce, I'm aiming straight for that 20-day moving average, and maybe even the 100-day moving average if there's enough momentum for the week. So keep your eyes on Apple for this week. Let's see what's going on with Apple, if anything. They had their event last week as well. So what I was going to say is, they had their event, and there's going to be a bunch of analyst activity regarding their opinions on Apple. And on tech overall. So, so for example, Gurman, whoever Gurman is, why Gurman thinks Apple can come out on top of this holiday quarter and reverse sales slide, right? So, the technology itself, I mean, it is what it is, but I think that there's going to be potential for a lot of people such as this person and others to make, statements and share their opinions that may potentially pivot or sway the way that Apple goes, whether up or down. We're going to see a lot of that potentially this week, especially with OPEX being done. Next one is Lulu. I love this setup on Lulu. I absolutely love it. We finally broke through this level, this 389.06 level that we've been fighting with for months, ever since May, right? We finally broke through it, came back and retested it, and we formed a hammer on it, right? And that's just very, very powerful. And also putting a green day on a very strong red day. So I like Lulu for a potential break to the upside here. We want to target some of these levels, 390, 392, 28, or sorry, 393 pretty much, and then 394, and then 395 at that point, right? But I also see a nice falling wedge here. If we go on a 2-day chart, there's a potential pivot machine gun here as well, right? We got a nice reversal pattern at the bottom of a few days of shooting down, and then we got nice targets to the upside on a 2-day chart. So very, very interesting setup for Lulu. Let's look at the weekly real quick on this. Yeah, I mean, and it looks like all it's doing is just coming back to retest previous resistance. So if it defends this level, then I think that there's going to be potential strong movement for Lulu in the future, especially bouncing off that 20-day moving average. Just very technically very strong, right? And then we have this very strong pivot here, high of 410. So above 410 would be what we want to see for Lulu ultimately. But we gotta defend this level here at 390. So let's see what happens with it. Next one is DKS. There's not so much going on with this. The only thing I want to mention is that the 20-day is very, very close to where price is. Price bounced off the bottom of this support line, this rising support line, and formed an inside bar, a nice resting bar. So there's a potential for a 3-bar play if the momentum is in favor of DKS. So I would target a break of the high of Friday would be your entry. You know, it definitely has to break through Thursday's high. And with a nice magnitude candle, it can come back and target this $117.99 mark here. Nice 3-bar play into that 118 right through the 20-day. Come back, retest the 20-day on the next day, right? Maybe on Tuesday, Wednesday, Thursday, whenever it is. Come back and backtest that 20-day moving average and then work its way into the gap. The gap is what I am salivating over. So DKS will stay on the chart on the watch list for a couple of weeks. And that's what I'm looking for with DKS. Very, very nice setup there. Google currently, yeah, there we are. Let's go to the weekly for this. So Google had this, obviously, as the rest of the market and especially tech, had that strong drawdown all 2022, formed a nice base, retested this low a bunch of times, formed some higher lows in these couple of weeks, came in and bull flagged, broke out, and continued to move and just been ripping the entire time pretty much. We broke above last week's high and the previous week's high. This is almost kind of a 3-bar play here. I don't like the sell pressure on this, so I wouldn't call it a true 3-bar play, but we had a nice strong bar here. We had the resting bar, you know, the inside bar, resting bar, didn't retrace 50% of the move. And now we got the beginning of a breakout, breaking through the high of this candle and the high of this candle. Now, I think that with OPEX Friday, that caused this to stall a little bit. But I do love, obviously, this bull flag here, and I'm loving how it's working its way up to the upside. So the first target for this is always going to be 140. 140 will probably be the strike that we play for this week. Let's see, 140. For Friday's expiration or even next week's expiration if you want to give it enough time. I think that 140 is 100% in the books for Google very, very soon. Go back to that weekly. Above 140, we got a final target for this Fibonacci move where is it? This one. For this Fibonacci move here, this small move here, right? The breakout of the first bull flag to the high. Final target of 144.69 for that one. So I see 2 or 3 more weeks of maybe strong continuation, especially if we can get above this, all the sell pressure sitting in these 2 candlesticks here. You see it? Those 2 wicks. Get above these 2 wicks. Let me just zoom in on it. Get above these 2 wicks here. I'm sure it's going to be tough to break through this level here, but 140 will be the first target. I think we pop our head above, sell down, sell down, sell down. Hold somewhere at 136, 137, and then work our way into that 144.69 for Google. So I'm very interested in the continuation here. Let me just go ahead and put it on a map. Let's see, we got this. Maybe pull back a little bit here. Hopefully form a higher high or higher low rather. Right, it's still choppy, but I think we get ultimately to there. Either that or we pull all the way back to form a new low, try to retest that high, maybe fail, then break, and then continue. But I want to see it. I want to see it at 140 in the next couple of weeks. What else do we have? BX. So if you guys played BX with me last week, we had a nice swing. It was It went from 60 cents to I think $2 or something like that. Just a nice calm swing, nothing crazy. Like very, very nice. It's slow, but those are my favorite. Like they're slow and they pay very well. I'm just going back to see if I can find it. Let's see. Yeah, we played 109 calls starting on the 7th. So it was at 9:15, 109 calls. And yeah, I mean, we ended it at 113. We hit a high of 115. So nice strong move to the upside. I think the 7th was this day when it kind of ripped here that morning, and it just gave us a nice strong move all week. So I think there's a continuation here. I see a potential bull flag forming. I want to go to the 2-day real quick. Yeah, I mean, there's a little bit of indecision here with all this sell pressure and then a couple of dojis. What I like is that the sell pressure on this candle didn't bring price way back down to retest the top of this broadening formation. It led to some indecision, and even like the opens, the closes, and the highs and the lows got higher from Thursday to Friday, or from from these days to this day. Everything's been shifting its way upward. And we even broke out and made a new high for the year. So I like it for continuation move. I want to see where it ends up kind of landing. Right now, it's just kind of living in flux. We're sitting in between this gap here, between these two candlesticks. Let me just extend that out. We're sitting right inside that gap. So if we can stay above the gap or just work our way to the upside of the gap, I think that we'll be in a good spot. And then let me mark some of these older levels. I love charts like this. We've been here before, so it's not impossible, right? It's not like we know what can happen, right? So those will be the future targets. Also future areas where BX can fail. So just keep that in mind. But I like the chart. Love it. Inverse head and shoulders on a weekly. If you look at it, right, there's a left shoulder, head, right shoulder, breakout, cup and handle, breakout, right? Like it's very bullish, very, very nice chart. So that's gonna stay on the watch list for a couple of weeks until that move is done. The next one is Disney. I don't think we have too many more. Let's check. Maybe like 4 or 5 more. Yeah, 4 more. Disney, I think, first of all, I'm going to say that I think Disney's in a good spot for anybody who is a shareholder or wants to be a shareholder. I think Disney's in a really good spot right now for adding to your position, because look where we are. We're right at the COVID lows, right? We're right at the COVID lows. The only thing with Disney is that it is surrounded by a bunch of political discourse, and so that's what makes it a little bit risky. And I'm not gonna lie, there's a very, very massive cup and handle to the downside. Here's your cup, here's your handle, back to that neckline, right? It keeps coming back to this neckline. I like it. If you want a nice risk-free common to buy, then I would say maybe Disney would be the way. And it does need to show a bit more strength and like show a little bit better character. Right now, it doesn't have the best character for it to show that it's going to move to the upside. However, I do think that Disney, it's a nice risk-free spot. Let's say you get it at the high of day, right? Let's say you take it at the high of day, and you set your stop to like this consolidation here. And this is for shares. This is just for shares, right? Nothing crazy. You can trade the shares up and take an 8% move to the upside. I would say in the next couple of weeks, you get a nice 2.43 to 1 risk reward ratio. If the thing starts moving in your direction and it breaks up to the upside, it gets to that 100-day, you can bring your risk up to the previous to the low of the day on Friday, and that will bring your risk reward to 487 to 1, and then you can take if it continues climbing, you bring your risk reward up. I just think it's in a good spot to target that 200-day moving average. Maybe fake a bunch of people out and take out this high here, change the character, hit that 200-day, and then flush a little bit downward and give you another opportunity to load up. But I think it's in a good trajectory right now. And let me see. I think I saw something in the news about Disney. Yeah, the CIO left. Media mogul, $10 billion for Disney Broadcast Network. So that's an interesting deal. I don't think will go through, but I think that shows that the asset is valuable. This news might trigger a nice move to the upside or downside. It came out 2 days ago. Based on the reaction from 2 days ago, it's been, the price has been rising. Even on OPEX Friday, it was still a green candlestick. So I just think it's in a good spot. And then same thing with options. Maybe buy a couple of weeks out and target this 100-day moving average. That'll be the first target. And then above that, we can target the 200-day moving average. We really need to get above, for this to be bullish, we need to get above that $87.08 mark. But the risky entry would be just to break a day high, take it to the upside. Let's see. DoorDash. Not my absolute favorite chart. Let me go to the monthly on this real quick. Not my absolute favorite chart. However, I will say the setup is pretty sweet. It's tough to ignore. All right, so we had this on the monthly. We had this very strong month here where we kind of made a new high. We broke out of this range. We've expanded the range to the upside, and then we failed hard and then went sideways for like 6 months straight. And now we ripped back up to this level and we sold off a little bit of buying interest at the bottom of this candlestick. Same thing here, a little bit of buying interest so far at the bottom of this candlestick. Nothing crazy so far, but on a weekly, nice strong move to the upside. Bullet bearish engulfing, brought it back down, didn't pull down more than 50% of this move, right? Look at this strong move. We only came down this much and then buyers stepped in. So I do like that. I think that buyers are interested in at these levels. Let's go to the daily. And then what I love about DoorDash, what brought it to my attention and what brings it to your screen right now, is the fact that it is currently, it looks like, and let me zoom in on a little bit more. Yeah, it looks like it closed right above that 20-day moving average. It tested at the beginning of the day, failed. It made a higher low, right, than pre-market, consolidated, and then ripped at the end of the day just to get above that 20-day moving average. So I think it breaks above the 20-day, comes back and tests it, and then works its way up into that 50-day. I think there's some good, I'm not going to call it a week or two, maybe 1 or 2 good days out of DoorDash this week to target that 50-day moving average. And then above that, we can target this level at 84.25 for DoorDash, right? But not my favorite setup, but I think that we can get 1 or 2 good candlesticks out of it this week, right? Let me see what's going on with them in the news. I don't think there's much. Yeah, there's not much going on. They got a downgrade a couple days ago. They got a downgrade 2 days ago. Stock fell, put a green day. Let's see, that was a 2-day. Yeah, they got the downgrade 2 days ago. It gapped up the next day, indecision, broke through the 50-day, and then the 20 days holding. Now, if it does break down, if this was just like kind of a bounce, right, this can easily be a bounce. If that was a bounce and break down below the low of that day, and we could just target these sequential lows here for a potential pivot machine gun to the downside. Nice rippy candle back to this 100-day moving average on DoorDash. If that downgrade continues to affect the psychology of the stock. Moffett Nathanson is pretty well known, but I mean, who cares, right? If they like it at this level, if investors like it at this level, they're going to just keep buying it. So it doesn't matter if what analysts think sometimes. Next one is JP Morgan. JP Morgan, the reason why I like this stock, obviously we talked about XLF earlier. And the reason why I like this stock particularly is because right now the setup is prime for a clean target to the upside or downside. We have an inside bar on Friday. Nice little doji. Oh yeah, I have green lines, so I can draw these blue ones on top of it. Nice little doji, break to the upside. We can target that 50-day, break to the downside. We target the 20-day. Very simple. And then if there's a continuation, we have a very clear target above the 50-day. We got that 153.30. Underneath the 20-day, we got the 100-day moving average right here. So you could ignore these green lines. Let me get rid of them, actually. But I do like JP Morgan. Again, as we spoke about in the past couple of sessions on the weekly watch list, the banks have restarted collecting student loans. Or rather, the government has reinstated the collection of student loans, which benefits the banks. And I think JP Morgan is going to stand to benefit as a result of that. So I think the potential for breakout to the upside, hit that 50, break above that, hit that 153, above that 155. And then from there, we see, right? We see what happens from there. And then let me just give you a quick fib move on this. Yeah. Final target 154.37-ish. If we can hold these levels, right? But look where it bounced on Friday. It bounced right at that 78% Fibonacci level. So Potential for it to go back to the 100, break through the 100, go to 110%, 120%, 140%, 160%, $154.37. Do we have anything else? CVS. Yes, I think we have one more name after this. Or is this the last one? Oh, yeah, one more after this. CVS. Beautiful, beautiful setup. Absolutely gorgeous setup. I'm so upset that we missed this, missed it early in the week. Very, very strong move early in the week. But, there's no time like the present. So let's capitalize on what we have in front of us. This is a very, very beautiful setup. The reason why I like this setup so much is because we had that strong gap up, filling the gap a little bit, slightly filling this gap here. Magnetized straight to that 100-day and that 50-day. Rejected it on Wednesday, rejected it again on Thursday, and then butt its head right into the bottom of it on Friday. This is a triple tap of sorts. Let's go to the 30-minute chart. This is just a very, very nice setup. Very, very nice setup on our screen right now. We have the 20-day that we ripped right through on news. I believe it was on this day. I'm not sure what the news was, but very, very strong move. Breaking out from the low of 66 to the high of 69. So $3 move at the end of the day in 1 hour, right? Very strong move. And then somebody got a very beautiful fill here. Ended it, and then it gapped up, opened above the 50-day, or tested the 50-day pre-market, came back down, retested it at the end of the day, failed it. Same thing the next day. Loves being around that 100-day moving average though, so the 100-day sticking around, giving it enough energy to try to work its way through the 50. Now, if we did have a nice red day in the market overall on the market, I think that CVS would have broken out completely this day. But very, very clean setup. We want to break above this pivot first, and then this pivot second, and then we can target. Let's go back to the daily. From there, you're gonna see us hit some of these old levels here, right? We're gonna hit that one, hit that one, hit that one. That's what I ultimately want, is that gap. So $73 calls potentially for the next 2 weeks. This week, maybe the 71 calls. Keep it simple. Play right at the money. 72 calls for the next couple of weeks, potentially. Nice and simple. Last one, Walmart. Walmart has been showing absolute strength. Is this the all-time high for Walmart? Yeah, look at that. Walmart's casually hitting all-time highs. Let's double check that. Is that true? Yeah, look at that. All-time highs. Wow, nice. Congrats to any Walmart shareholders out there. But yeah, hitting all-time highs. Nice. So I guess I haven't had this chart up in a while, but I did run a Fibonacci, a trend-based fib from this low here to this high here. Pull back, found some support, and that's where you get your fibs. I'll draw for you again. Here's the beginning of the move. That's the A, here's the B, and then support is the C. It's off by, yeah, there we go. There we go. And then as you can see, if the support were a little bit higher, the numbers will go a little bit higher. Support were a little bit lower, numbers will come down a little bit lower, right? But that's my trend-based fib. So based on this trend, here are the fib levels. And as you can see, everything in the future is a projection at that point, right? So we got a bunch of concentration at this level here. It bounced between these two levels, came down, found support, right? It's just wicked how this stuff plays out all the time. So very, very interesting. But let's see. And I was way off on my September 15th, 180 call. But we're working our way there, slowly but surely, right? Slowly but surely. I think above this level here at 165.50, we can target that 170. Above 170, we can target that 173 and change for Walmart. Otherwise, if we fail this level, we come back to that 20-day moving average. Very, very simple play. Nothing too crazy here, right? 168, 170. And then 174 at that point, right? And then below that, below this level here, 20-day. Nice and simple. So I'm interested in seeing what Walmart does. They paid out their dividend already. They have earnings already. What's going on in the news? Only thing with Walmart, I would say, is just watch Walmart alongside Amazon. I think that they're showing strength together, but they're going to decouple at some point because they're competitors. So one of them is going to make a power move, and I think that the other one might be adversely affected. But let's just take a look at very quickly through. TSM looks bearish. Looks like it wants to fall hard back into this gap here, back into this area of consolidation. HLT Hilton strong, but there's some stuff going on in that sector with the MGM Vegas stuff that might slow it down. Nvidia needs to hold a higher low to continue the trend to the upside. All eyes on Nvidia right now, so we'll see how that goes. D-Dog tried to go into the gap and failed hard off that 50-day moving average, so let's see where it lands. X right now is just getting tighter and tighter. We can probably just shift this over like this, right? Nothing there for now. We'll see what happens tomorrow. Tesla. Yeah, I'm happy that I went through that. Tesla, 2-day. Tesla 2-day. And this will be our last one, guys. Tesla had this channel that it was forming, broke above the channel, big range expansion to the upside, broke above all this previous resistance here. Inside bar the next couple of days, and then the last couple of days so far. And I don't know if this is Thursday, Friday, or this is Friday, Monday candle. I'm not sure, right? Let's see. This is Wednesday, Thursday. So this will be Friday, Monday. So we broke above the range of Fridays, Wednesdays, Thursdays high, and we pull back a little bit, and now there's a potential for this to, depending on what the market does, continue to break out into this very, very tiny gap that's here. Very tiny gap right there. Right, that's where we're targeting. 284 or 283-ish. 283 and change is what we're targeting. And then above that, we can, from that gap, above that gap, we can potentially test that $299 mark for Tesla. I don't see failure for this week. Benson just posted something about them selling their 5 millionth car. It's very bullish. I mean, it's just like great news for a car company, technology company. 5 million pieces of technology hitting the road, collecting data. It's very, very strong for this company. And I think some of these analysts are finally starting to look at this as not just a car company, but a tech company for real, which is going to change the way that the world looks at it, right? So I think strong move into this 284. Above that, we got 280, 291, and then above that, we got 300. So that's what I'll be watching for Tesla for the next couple of weeks. And then final target for this, way down, maybe 2025 or so, will be 382 and change, depending on what kind of move we get, what kind of news we get, what kind of market we get. But that is it for me tonight, guys. Thank you so much for being part of this call and sharing it with me. I will post, for anyone that missed any part of this, I'll post the recap tonight. Should be up by midnight. And I hope you guys have an amazing night, get some sleep, and we're going to have a nice, fresh set of eyes for the market for tomorrow and all week. All right, thanks, guys. Peace out.